Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. I am Bonnie Hughes. Today we are speaking with Trident Royalties PLC. They acquire royalties and streams in a broad base of commodities in resource-friendly jurisdictions. The company raised $16 million in conjunction with an AIM listing in June of this year, and their share price has increased 50% since their AIM listing. And here to tell us all about the company is Adam Davidson, CEO. Hello, Adam, and thank you for joining us.
Hi, thanks, Bonnie.
So yesterday you made a very good announcement that you just acquired a 1.5% NSR existing royalty over the million-ounce Lake Rebecca gold project in Western Australia. Tell us about the transaction and the benefits it brings to the company.
So it's a very, very good transaction for us, and we were very pleased to get it. I think, a gold royalty like this that's over a substantial deposit that's credibly advancing towards production and is sizable and meaningful. Those sort of things don't pop up every day. And in fact, I think if this deposit was in Canada or in North America more broadly, it would have been gobbled up by the TSX listed precious focused royalty companies, probably at a significantly higher price. So it was a meaningful royalty for us to get into the mix. As you know, with regards to our strategy, we're focusing on a diversified portfolio that will be broadly reflective of the mining sector as a whole. So we're looking at a third precious metals, a third base metals, and a third bulks and industrials and battery minerals and everything else, which is roughly the breakdown of the sector. So we see this acquisition as being really the cornerstone of our precious component of our portfolio. The asset is credibly moving towards production. The MD of Apollo Consolidated, which is the operator of the asset, has publicly stated that they're looking for construction to commence in 18 to 24 months. It is already of a size and scale that would support a standalone project. That said, the resource was published this past February, and they've done significant drilling since then and have had very good intercepts. And so you'd see the resource growing just off the back of what they've done from February to today. And then obviously they're well funded. They're out there and continuing to drill. So we see growth potential in the asset before it gets to that sort of construction stage. But would look for it to be turning on around 2023 and seeing a meaningful production profile that has us repaid our capital relatively quickly within the first couple of years we'd be anticipating. And then from there, you've got a long life asset, getting a good precious metals exposure into the foreseeable future.
And what are the terms of the transaction?
So it was 8 million Aussie. Importantly, $1 million of that was done in Trident equity. And this is a model that some of our TSX listed peers have sort of pioneered with regards to using your equity. And now we're at the stage, we've been listed 4 months. People are seeing the market response that we're getting. And so our equity does have value in sellers' eyes. So to be able to get a good chunk of equity into the transaction, obviously priced at a 50% increase to the IPO, was a very important part of the transaction from our perspective. But yeah, it is our biggest transaction to date. But I think is a substantial royalty that underpins a lot of value within Trident.
What would be the potential revenue from the project for Trident?
It obviously depends on the size and scale that they ultimately achieve of the resource. We see it as being, it's early stage and there's still work to be done, but we see it as being on track to being 100,000 ounce a year producer and hopefully more. But at 100,000 ounces, and at spot gold prices, that's closing in on 3 million a year. And we paid 8 million Aussie for it. So depending on the exchange rate when we actually complete on the transaction, that's call it 5.5 million. So yeah, if you if it's in production by 2023, you're repaid within the first couple of years, and then you've got a nice sort of 8-year plus life after that repayment to get your return. So it's pretty significant with regards to return metrics. And obviously you're uncapped on this royalty. So, if they expand the resource and it's more than 100,000 ounces, or if, as most miners do, they front load by high grading their production. So the first years are much higher production profile, and then it tapers from there. All that benefits the royalty and benefits the economics ultimately.
Well, that sounds like a great deal for Trident. So you've made 5 acquisitions over 8 royalties in less than 4 months of being listed on AIM, which is very good. Can you give us the highlights on your other royalties?
Yeah, sure. So our first royalty was a paying iron ore royalty in Australia, and we've received 1.4 million Aussie so far. We bought that one for 6.65. So we've received 1.4 through July. So we've still got the back half of this year to go. So you can see a very good, again, repayment profile. Iron ore is still going strong. Was the best performing commodity so far this year, mining commodity this year. So it doesn't quite get the glitz and glamour of gold, but very strong economics from our perspective, and a good it's a major operator who's investing in the asset in a good jurisdiction. So it ticked a lot of boxes for us. And then our second big acquisition was over the Mbula copper project in Zambia. Copper is a commodity that we're particularly bullish in internally, and it's a nearly 100 million ton deposit at 1% copper, so very good grade. They're toll treating and producing right now. So again, to get a paying copper royalty on an asset of that size and scale, again with sort of similar compelling economics, that we were very excited to get that one, because again, these are ones that don't pop up every day. And then from there, we've acquired some development and exploration stage assets. I think the important thing for us to flag on those is overriding priority for us is when we're getting development stage assets is there has to be a credible path to production, because there's hundreds of royalties in existence, and you can go out there and mop up dozens of them, but it doesn't give you any true value if they don't have a pathway to production. So that's our overarching concern, is to make sure that there are good, solid, credible royalties in the portfolio that have real value for Trident shareholders and a pathway to cash flow, so that we can unlock things like paying a dividend in the near term. So that's our priority, and we're very happy with the way the portfolio is coming together. As mentioned, we're targeting this sort of three buckets with regards to precious base metals, and then sort of bulks and batteries and everything else. And when you look at where we've deployed capital so far, we're obviously looking for the most accretive transactions, but also pleased to see that we're basically hitting that allocation. So we are giving investors the capacity that if they buy a single share Trident, they're now getting exposure to the sweeping exposure, the full suite of mining commodities, and we're going to continue to build on that.
So you obviously have a pipeline of potential deals. Can you give us an overview of what you're kind of looking at and what investors could potentially expect in the future?
Yeah, sure. I mean, and this is where actually being a diversified royalty company relative to nearly all of our peers that are precious metals focused, they've kind of got the unenviable position right now. Gold is in a good spot, and so that's very nice for their share prices. But with regards to doing deals, they're sort of stuck with, do you do deals at a very high valuation, or do you sit on your hands for 12 months, which is not an attractive prospect for a publicly listed company. Whereas we can pivot, and as other commodities are sort of hot, because it's all cyclical. We can pivot and look to battery minerals, for example, or base metals. And then, when gold sort of tapers, we'll pivot back to gold. So I think from our perspective, though, a lot still in the pipeline. We put out in our updated corporate presentation a bit of a snapshot of the pipeline, and it's all the lawyers will let us get away with, but hopefully gives people a sense that we are seeing opportunities across the commodity spectrum, and importantly across the geographic spectrum as well. So assets in North and South America, Africa, Australia, we're really seeing a good flow of potential deals.
And you obviously have some capital and cash that you are available to acquire these potential acquisitions in the future.
No, that's right. I mean, we've got available capital still in the bank from our fundraise. And importantly, we're a cash flow positive company. So we've got revenue coming in now from two royalties. So people can look at the track record of Cooley-Nobbing now and begin to form a view. And Mbula, obviously, we're expecting it to exceed its minimum payment schedule, but at the very least, people can look at the payment schedule on that royalty, which is a minimum of $375,000 US per quarter next year, and then that increases to $500,000 per quarter in 2022, and then $750,000 for the first 2 quarters of 23. So you can look at our cash flow profile and see that we'll be generating capital, which we can then deploy, or which we can use to then service debt. You hit this inflection point as a royalty company when you get to this position where the model becomes self-sustaining and we can continue to grow without needing to go back to shareholders and constantly raise money.
There's been some talk about the fact that royalty companies kind of holds down your upside, but on the other hand, it reduces your risk profile as well. So that's the purpose of having a royalty. Can you just discuss that a bit more?
Well, yeah, I mean, with regards to risk mitigation, yeah, I mean, that's why they trade at premium. That's why royalty companies trade at premiums relative to the miners. I mean, you're faced with using just the gold as an example. You can invest in a mining company that produces 100,000 ounces from 2 mines, for example, or you can invest in a royalty company that has an attributable 100,000 ounces, but it's from 12 royalties in 4 or 5 different jurisdictions. It's a completely different risk profile. Layer on top of that you're at the top line, so you're not exposed to cost, at least only in a binary way. So as long as the mine stays open, you're getting your cut of revenue. And if their cost blows out, then equity suffers, but the royalty is still getting paid. So yeah, there's quite a bit that sort of puts royalties in a very defensive position. But we're in the attractive position also of then when the miner says use some capital and expands their project, increasing throughput, or they do more drilling, increase the resource. All that still benefits the revenue line of the P&L, which is benefiting the royalty. So you get that nice blend of sort of risk mitigation, but still exposed to the upside completely. Similar to equity, and in some ways sort of accelerated. It's almost a derivative-like vehicle in that regard, but with a lower risk profile. So you couple that together, and it's no wonder that royalty companies trade at valuations much higher than mining peers.
And so what experience does your team bring to the table in order to help you with this pipeline of potential opportunities?
Yes, we've got a very good team, and you would have seen probably that we added Helen to the board last week. So she's got a very strong technical background, a geologist. My colleague in Perth is a metallurgist. We've got members on the board that have a mining finance background, a mining legal background. So yeah, we've now got, I think, all major disciplines with regards to technical, legal, financial covered off within Trident. And then obviously when it comes to specific transactions, we'll go out to consultants that are suited for that specific asset, because no company, no matter how large they are, has all that information sort of in-house. So when you're looking at a sediment-hosted copper deposit, you go and find a sediment-hosted copper deposit expert, and we've got those connections as well. So I think we're very happy with the team and the position we have. I guess the great thing about royalty companies, again, is relative to miners, we're not operating mines. So as we double the size of our portfolio, we don't necessarily need to go out there and double or triple the size of our team. So it's a very scalable business model.
That's excellent. And I guess investors can look forward to hearing about more of your acquisitions and your potential financial outlook of the company in the future.
Absolutely. Yeah, we're not going to sort of sit back and rest on our laurels. There's still a lot of work to do. And just the fact that we are the only sort of growth-focused, diversified mining royalty company in the space, that's not a window that's necessarily going to stay open forever. And we recognize that. So we're out there aggressively. We want to add to the portfolio and build it out and put ourselves on the front foot in that regard. So yeah, certainly going to be pushing ahead and hopefully have some news for the market before the end of the year.
Adam, thank you very much for joining us on Share Talk. We look forward to speaking with you again and watching your news flow and keeping an eye on your share price.
Yep. Thanks, Bonnie. Thanks for having me.
And thank you very much for joining us on Share Talk. Have a profitable day.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.